Hi, welcome to the Active Value Investor channel. My name is Victor. In this video, I'm going to be covering a small regional bank by the name of Midland States Bank. This bank operates in the Midwest out of Illinois and really pays close attention to all their operations. It's a really good bank to have. I've owned it since 2020, and I wanted to update my analysis since today they announced their earnings for 2022. I like to scorecard my investments for banks. Specifically, I'm looking for a discount on the investment. I want to know that my stock price is going to go up. I want to know that the bank is operated and performing well. And I want to know the timing's good to either buy, hold, or sell. Let's take a closer look at this bank. So on the earnings call for the fourth quarter, or their earnings release, I should say, they had a lot of good news. First off, they had more net income than expected. Always the good news. They had a big gain on a rate swap cancellation of 17 million. Also good news. Really like seeing that loans increased by 7% in that quarter, and their tangible book value went up by 4% in the quarter. So a lot of good stuff in Q4. So today, the management team also released a Q4 package along with their earnings release, and it just reiterated a couple of things. Very strong performance, the net income, the top line growth, commercial lending, loans increased by 7%. Net charge-offs are really low. That's what you want to see in a bank. You don't want them writing off a lot of loans. And their capital ratios look great. So overall, just a really good earnings release. So just wanted to show a graph showing net interest income, and it really shows the last 5 quarters. Really like how you had an upward slope, but it looks like they've leveled off. It'd be nice to see them increase their net interest income and see it get back on that trajectory. Net interest margin, it kind of gave me a little bit of concern that they, again, were going up, but now they've come down a bit. So it'd be nice for them to get their net interest margin, really into that upper 3%. And I know that interest rates have changed a lot. So hopefully they can adjust and get that back into the ratio of 3.65% or higher. So the number of non-performing loans is really under control. They had it, last fourth quarter, they were at 0.81%. Now it's down to 0.78%. So it's good that they're controlling that. The net charge-offs is really low. Q4 of last year, we weren't in a recession or anything, was 0.37%. Now it was at 0.03%. Extremely low. Again, they're paying close attention to their bank, making sure they're making good loans. Now these charts are a little dated, but they still kind of share or show why I invested in this bank. And it's because they're growing. Their CAGR since 2016 is 18% if you compare from 16 to 21. And 2022 did really well. They're very profitable. They grew. So really, the bank is showing the right metrics for me to be an investor. And they return capital to investors. Over time, their dividend has gone up, which is great to see. And they're really profitable this year. So I wouldn't be surprised if their dividend is raised. Now, the performance over the past year is nothing really impressive. It's really basically stayed flat. But you are being paid a 4.35% dividend, so that's a plus. And 2022 was brutal for many stocks. I think if you were a Tesla investor and lost 75% of your value, or a Netflix investor lost 75% of value, you would take zero any day. But this bank's really been up and down and really traded sideways for the past year. Over the past 5 years, much of the same. It's traded sideways, except for when COVID hit. This bank really went down in stock price, but the bank really kept operating. They managed through that pandemic. And I started investing back in this time frame, which is why I'm still up on the stock, even though it's traded sideways, and it's paid me a nice dividend. So the way I value banks is different than the way I value companies. I value companies using discounted free cash flows, but that doesn't really work for a bank. I use a method of using the price to book value ratio and the forward PE ratio. Take the two, average the two numbers, and then go with that valuation. So for the book value method, I took the book value that I have for 2022. Now that the income statement, balance sheet are available for 2022, is able to update those numbers in my overall model, and then take 2022 numbers and grow them by 7%, which is a conservative growth rate, since they're growing the book value by about 11% if you take the last 6 years and average them out. So that gives us a starting book value of 616 million, and we grow that at 7% and then come down to 5% over time. We're looking at a book value in 2022 of 789 divided by the number of shares. We get to a stock price today of 35.60 if we use the book value method. If we use the projected PE value method, again, we take the income statement information. We have earnings per share for 2022. It's been growing very well. It grew about 21%, in 2022, but we're not going to use that number. Historically, they're grown around 15%. So I'm going with a conservative number, 7% growth rate first 2 years, come down to 6% and then 5%. We take 2022 numbers grown by 7%, we get $3.25. You take that number and it gives us a value today of $32.24 per share. And I blend that number with the book value method number, and I get $33.92 as my value for this bank per share. The stock price today is $26.69. So I think it offers up a 27% discount, and you get paid a 4.35% dividend, which may be raised in 2023. So the dividend rate of 4.36%, really nice, healthy dividend, very sustainable. They generate plenty of profit to pay that dividend. They've also grown it over time. I think I showed a different chart. The growth rate has kind of come down because it's already a pretty healthy dividend rate, but they continue to grow it. I wouldn't be surprised if they raised it in 2023. All right, now let me provide a quick summary on the stock. 2022 performance was really good. Revenue growth at 12%, net income grew by 21.78%, book value grew by 20.57% in the year, and their price to book is 1.02, excellent. Banks on average are at 1.28, so this bank has a great book value. Very low loan losses. That's what you want to see out of a bank. For 2023, they're going to be conservative. They realize that we're going into a recession, and they want to be conservative in their lending. They want to continue to grow, but grow right, and keep paying that really good dividend. My outlook, this is a good small bank, operated very well, pays close attention to operations. I like the upside on the stock, and it pays a very good dividend. Now, revisiting the scorecard, this stock does give it a discount. I like that. It operated very well, and it's a good buy for me. I'm going to continue to buy into Midland States Bank. I've been buying. I think there's been some weakness in the share price. I've been buying into that weakness, and we'll see where the stock goes tomorrow. The earnings were announced after the market closed today. We'll see what the stock price is tomorrow, but at these prices, I'm a buyer. Thank you for watching the video. I hope you found it interesting and learned something about Midland States Bank. Keep in mind, I'm not recommending that you buy the stock. I'd like to share my experience as an individual small investor investing in MSBI. Thanks for watching. Good luck investing in 2023.